And here for some insight into VP Harris and former President Trump's economic proposals is Vance Ginn. He's the president of Ginn Economic Consulting and a former chief economist at the Office of Management and Budget. We're glad to have you here, Vance. Let's start with the capital gains tax. Under Harris's plan, the wealthiest Americans could see it go up to 28%. What will that do to investment?
Well, it's a pleasure to be with you, and it would definitely hurt investment. I mean, anytime you tax something more, you get less of it. And so capital gains are the gains that you get on your investments from your stocks, from your bonds, from your house, from a number of things that you get investments on and returns on. That investment will then be taxed at 28% compared with the 15% today. Now, this is better than what Biden has said before of about 44%, but still 28% is almost double the capital gains tax rate that's out there today. So this will certainly reduce investment and reduce economic growth and job creation across the economy. And it's something that should not pass Congress.
So, okay, Vance, walk with me here. Trying to understand the numbers. I got Patriot Software saying that the top line number of the capital gains tax right now is 20% up to 24% for higher earners, but the corporate tax rate that Trump wants is at 15%. So is that right? I mean, we're looking at two different things here.
Yeah, there's a number of things that are out there right now. The corporate tax rate right now is 21%. And then you have the capital gains tax rate. And some of those can be at whatever it is that you're paying for your income tax rate, the progressive income tax rate. But there's also lower rates, too. So there's a lot of rates that are out there. But at the end of the day, what happens from what the Harris has been calling for is a 28% capital gains tax rate and a 28% corporate income tax rate. So, in fact, what they're trying to do is to raise the tax rates on capital investments, whether it's from corporations or other gains that we're seeing. And this is why it will hit investments so hard and slow economic growth because of these higher tax rates that are going on corporate investments and investments by individuals.
Well, yeah, and Harris's plan is much more pulled back than President Biden's plan. He wants a 40% capital gains tax. And that's about exactly the same as much as the actual nominal tax that you pay on income, so very high for those high income earners. Is it a step in the right direction in your view? I mean, what's the best capital gains tax or to have overall, just in general?
Yeah, there's been a lot of talk about this. So that 40% is just way too high. It would make us very less competitive in a global playing field like we're in today. To me, the optimal capital gains tax rate is zero. We should not be taxing people's savings and capital gains and other things. Instead, allow that to go back into the economy and allow for more economic growth. Because when we have this increases in taxes, what it means is that the government is taking that money out of the productive private sector, out of your pockets, and putting it through government and then redistributing it throughout the economy. And that's often not nearly as productive as what's in the hands of taxpayers and Americans across the country. And so I'd rather see that happen. But until we can get there at zero, we need to allow for that tax rate to be as low as possible on income earners across the country and get the corporate tax rate to zero at some point, too, because businesses don't pay taxes. People pay taxes, whether it's the form of shareholders, workers, employers, and others. They're the ones that pay for this. And at the end of the day, we need to cut government spending. We're spending way too much and running massive deficits. That's really the problem here is spending, not revenue.
I've heard a lot of economists have been on the show this week that echo very similar concerns that you're having there. Now, let's talk about this corporate tax rate. On the one hand, if you raise it, that's probably going to lower wages, right? And it's probably going to make items for Americans more expensive. But the Biden administration says that if you do raise it, then you're evening the playing field. Instead of making the ordinary American pay more in taxes, now you're making the corporations pay more taxes. What's your thoughts there?
Well, my thought is that there's an idea out there that this money that's being saved and investments and everything else is just sitting idly by. And so it should be taxed and then put out into the economy through government spending. But that money is not sitting idly by. It's in the form of different businesses and allowing for them to grow, hire new workers, come up with new capital investments, and grow the overall economy. So this idea that it's just sitting idly by, so we need to tax it, is wrong. And government spending doesn't grow an economy. Investment in the private sector does. And that's the one reason why I'm so big on reducing government spending and passing sustainable budgets and making sure that taxes stay as low as possible, because more money can be in our pockets and in the private sector till we can have more growth and job creation.
So Vance, that's so interesting that you put this out here. And I mean, Trump wants 15% corporate tax rate. What's your ideal number to put that at to spur economic growth? Just in a few sentences.
Yeah. Well, 15% would be great. We're at 21% now. A lot of countries have already started to reduce their corporate income tax rates. Remember, before the Trump tax cuts in 2017, it was 35%, the highest in the developed world. Now it's 21%, and that's already above the European average or the global average of 17%. So the 15% would make us more competitive on a global playing field. I would like to see it even be lower than that. Of course, closer to zero is actually as optimal where we really need to get it. But 15% would definitely be headed in the right direction, along with spending restraint.
All right. Well, Vance Ginn, president of Ginn Economic Consulting and former chief economist at the Office of Management and Budget, thanks for coming on.
Yeah, thanks so much. Pleasure to be with you.